What's up guys, Mullins Momentum here, and welcome back to another video. In today's video, I'm going to go over risk management. I'm going to go over trend line, stop outs, stop losses, where to put your stops when you enter a trade, where to enter a trade so your stop loss is at a logical spot, and take profit zones. As always, if you like the video, be sure to give it a big thumbs up, sub to the channel so you always know when I'm either going live or posting new content like this. Let's get right into it. All right, guys, so I do want to start out and say I'm still a little sick, so I'm going to be a little nasally throughout this video. I'm sorry. Do the best I can. I also will say I'm recording this Monday intraday, so this is live market action. So you're going to see these stocks moving, unlike usual when I'm recording on the weekend. Nothing's actively moving. So there's going to be some hindsight in this video because it's going to be a little bit of like what you should do and things that didn't end up working and some things that don't. So I got SIG up, for example, here. When you're looking for an entry and you see it on, say, a trend line, and you see this level right here specifically, it came down to the trend line, and if you take an entry here, you're gonna, if you risk your entry, you're gonna get stopped out immediately. You do need to risk, 10, 15 cents depending on the stock, but you need to risk below the trend. And what I do is I watch the candle closes. So you see how each of these 5-minute candles ended up closing above the trend line. It doesn't always have to be within, the wick, but closing over is definitely key when it comes to the trend line. So when you're putting your stop in, you want to watch, because see, like this hit this level, this went just a couple cents lower, this went a couple cents lower. So you want to watch the candle closes. It is nice to have like a hard stop in, but also at the same time, you can get stopped out very easily if you have your stop in here and it just wicks down and picks you up and then it curls back up, especially on a volatile stock. This has been one that's been in play lately, so I wanted to bring this up and show you guys how important stops are, but also that you need to kind of watch these levels instead of just setting like a hard dollar amount. I personally never set like, oh, I'm risking, 5% on this. I'm risking 3% on this and go to hard dollar amounts. I risk levels that I'm buying off of. So if I'm trying to buy here, you watch these candles, you can set your risk here, and this is where unlimited day trades come in and over PDT helps. But if you do get stopped out on, say, a wick right here and you see it close back over, you can get back in and risk a new low. Now, you can get chopped up a little bit here. This is a very low flow, very volatile stock. But you see, like, each of the candles closed over the trend line, which ended up holding. Now, if you're playing, say, the breakout level, which was 23 here, you play up through 23, and usually, like if I'm taking a breakout, I'll wait until it pops through, and you see it pop through here, I would set my stop a little lower, and we'll go to the 1 minute to look at this a little closer. Okay, so if I was specifically playing this for the 23 break, see how it rejected 23 here, came back, and then this candle ended up pushing through. So if you're buying the push through here, I would risk the low of the candle before it, which was 22.91. And then once we get up through and make this push to 23.20, once you get through the level you're trying to buy through, I usually move my stop up to entry. So that way you're not losing anything at that point. And you already have like a 20-cent buffer. So it comes up here, and this is your scale zones near these levels here. But then once a bottom gets put in, say here, and you see that it held this level and starts pushing back up, you can move your stop to here. So move it up to 2307, 2306, or 2305, something like that. So moving your stop up along the way. It continues to push higher here, continues to push higher here. So now your new bottom is around like 2320, your risk off with your 23 entry. And then it continues to push higher, keeps making another higher low. Another higher low, just barely. So your stop will be here, 23.34. Still push to higher low. Still push to higher low. So you move. The way I trade is I move my stops up as new lows or new higher lows are put in. So at first you got to risk a little bit. You can't put your stop at entry to begin with, and you can never do that because you're going to get washed out. your first initial entry is going to have the most risk. But then if it plays out, then you can move your stops up higher and higher to follow levels. Like this is the higher low, this is the higher low, this wick's the higher low, and then it held here. Then you can put your stop at 23.38, and it pushes back up, and it holds here. So now you can put your stop at 23.61. So you're guaranteeing yourself 61-cent profit now. Holds here, pushes higher, holds this level. So now you can put your stop 23.73 locked in, and then it pushes higher, holds here, holds the 23.63 level still, and the first time it makes a lower low is right here. And actually, no, it holds the level again. Holds the same level. So held the level again, and continues to push higher. Then you can move your stops up. Under here. Like this is a good breakout zone. But I usually move my stops up, take some profit along the way, but keep moving your stops up until the trend finally breaks. And you see, if you're following this up, right here, it finally broke down. And you would have stopped out for $1.40 profit. And then, as you see, it does come down and end up going higher. But for the play that you're playing and the risk that you were playing, walking it up, the stair-step movement, you played it right if you sold right here, 24.40. It does come back down to low 24, get scooped back up, and continues higher. But if you play like that, you're going to last a very long time. You're going to last a very, very long time. No reason to buy, hold, and hope. No reason to try to ride forever. But if you play with your stops, continue to move them up, put them under the lows, put them under the lows, put them under the lows, and continue walking that up, that'll make sure that you lock in profit. It is very important to buy at specific zones, though. Don't just be buying in between because your risk reward's all screwed up. Try to buy close to like EMAs or support levels. Say on this one, like if you're buying up here, your risk is all the way, down to 24.75. But if you wait till it touches, say, the 20 EMA, then right here on this hammer up, this is a 1 minute candle. You're only risking, say, like VWAP or just underneath VWAP. And then once this breaks back out, you can move your stop to entry and then move it to the higher low, to the higher low, to the higher low, and it just keeps going up and continues through. So this seems like an easy example, and it's nice to be able to go back and look like, oh my gosh, I can go back and, I could have done this and this and this, and it's different with live trading, of course. But best case scenario is when you move your stops up to the levels, the higher lows that it holds until that higher low breaks, and that's when you get out. And sometimes you'll get rated out, sometimes that'll happen. But overall, that method will lock in the most profit. Veru is another one that's been running lately. It's probably the same scenario. And I do not like this stock the way it acts. But if you're looking for entries, look for entries near the EMAs, near the trend lines, and then try to ride your stops up. If your stops get rated out and the trend fails, then you did the right thing. If it gets rated out and it holds the pattern, you can always get back in. But like these moves right here are hard to take. It's just barely touching the EMA, kind of fails down, pushes back up. This is like an algo move. This is a harder one to move, or a harder one to trade, But if you were to get low entries here, off the 200 on the 5, and say, you're buying here, it does fall below, but it gets back above, and say you take entry here. Once it pushes back up, set your stop for even. And then as it continues making higher lows, keep moving your stop up. Stop here, stop here, stop here, Continue moving it. It puts in a bottom here. Now your stop's at 1622 when you have an entry at 1575. And risk that level. Pushes up, makes another low. That's your new stop. Pushes up, makes another low. That's your stop. And you just keep letting it walk up and walk up and walk up and walk up until that trend breaks. Now, entries, once you get into this higher zone, is more difficult. You watch for the 9 EMA pullback. Watch for these 2 candle pullbacks here. But entry is the hardest part. Now, something where you're trying to take an entry and it fails out. Say you're buying, it gets back above VWAP here. Hold above VWAP, and then you have your stop set underneath these levels that it has been holding. Say the lower wick is 1605, and you set your stop at 1604, and it gets hit. You do take losses there, but it's minimal, and you're risking as small as possible. Another example here is AMC. It was kind of difficult to get entries, and there were levels that held very strangely, but if you were able to get an entry in these zones, just keep moving your stop up to higher lows, and take profit at profit zone. So say if you were to get in this zone here, your resistance is here because no candle closed above here. So take profit here and continue moving your stops up to the higher low, to the higher low, to the higher low. Once they get confirmed, and you don't put them in immediately because the higher low is not set, but you see it whenever it comes down to here, this candle hammers up, and then you make a green candle. That's when this is confirmed as the higher low, just like right here. You don't put it in while it's still trading sideways. You wait. You can be scaling in these zones, absolutely, but you wait until it pushes higher, and this is a confirmed higher low down. And it pushes higher here, and it starts to pull back and fail, but it holds the higher low. So, I mean, even if, let's say, you have your higher low here, and then you see this setting, but it doesn't go higher. It doesn't make the move higher. So this is not a higher low set in. It's still here, and it holds, and then pushes higher. Now, this is your higher low. And that continues on. This is through after hours, continues higher and higher and higher, until it finally starts to break down through some higher lows, like right here, right in this zone. That's your sell zone. But I want to make a short video. Didn't really want to get too complicated into it. But when you're taking your entries, make sure you're taking them at levels that make sense, at levels that are on support, at levels that are safer. You can't, not all entries. There's risk involved with every single entry you're going to take. Risk involved in every single trade. I don't care if you're on a trend line. I don't care if you're on anything. But if you get your risk low and be patient on your entries on specific stocks, and then you risk off underneath certain levels, say if you're buying off the 200 on the 5, you're risking a little bit below it. Make sure, watch for your candles to close over though. That's a very important part, especially if it's holding. It's kind of roughly holding, and then push higher. This is kind of a weird example. This is not the best one. Let me go to something like Apple. If you're buying, say, Apple, look for like this level right here. This was holding over and over and over again. It's not as perfect EMA, but 168.50 was a psychological support level that continued to hold. Or if you're buying off the 20 on the 5, see, Apple went below here, but pushed right back up. So you watch for your levels to confirm hold candle closes, and then you move your stops higher, higher and higher and higher. Now, for non-PDT guys, for guys under PDT, it's a little harder, especially on ones that are very active. Because if you do get, say, you're buying on the 200 SMA here on the 5, and you do get rated out on this candle, then you're screwed because it's kind of the end. So it's difficult. But if you do have PDT and you get stopped out on an entry here, this is a good risk reward. This looks like Apple's about to break down, but it ends up hammering back up and continuing. It did eventually break down. But if you get rated out right here, you can always re-enter if the level holds. But if you're stuck under PDT, it's a little harder. And you have to be a little wider with your stop losses, which is unfortunate. But make sure that if you see a candle close down and it closes below, closes weak, then more than likely that's a confirmation that it failed. Just like we were talking about earlier with volume. Last week, I think, on that volume confirmation of trend breaks is what you want. And it's either to the upside or the downside. But I want to make this short video, just try to help with entries, like trying to buy as close as you can to support levels, and then move your stops up. Continue to move your stops up to higher lows, higher lows, higher lows until that trend breaks. When that trend breaks, you get out and you secure the most profit as possible. Now, those levels can pull back and then push higher, but you were trading your trade. You were trading your setup, and you played it to perfection. So that's all I got for today, guys. I hope you enjoyed the video. I hope you learned a little bit. And I will see you guys back on stream or back in next video. Have a good one.